Good morning, traders. This is Frank Cholly with RJO Futures in Chicago, coming to you on Tuesday morning, February 5th, with your grain market morning commentary. Currently, we have grains trading lower across the board. Corn is 5 to 6 cents lower right now. Soybeans about 9 to 10 cents lower, and the wheat about 2 to 3 cents lower. Now, these markets were all starting to move higher, especially soybeans. That's the short-term trend up. Wheat and corn both will call sideways to up at this time. And as I've mentioned before, bull markets need a steady diet of positive data. So right now we're a little stale on the data. So what we'll do is we'll look forward to this Friday. We have the monthly crop report, the supply and demand. And this isn't one that I would call a big report or one of the more important reports, but it might be what we need to get these markets to start to move in the right direction, and for me that would be higher. So we're going to look at or get a better idea what the USDA is looking at in terms of what we talk about all the time. Supply and demand here in the US, actually it's all about demand right now, and then the production in South America, which is obviously affected greatly right now by the weather, a little bit of delay in the harvest because of the weather at this time. And it'll be interesting to note in this report with regards to the wheat, if the USDA starts to see a shift in demand as far as feed usage goes. We're looking at wheat prices at a very competitive level right now as far as, on the world market. And then that relationship again between the price of wheat and corn is very narrow. And again, that's when we start to see, the feed usage increase for wheat because it's gotten too close to the price of corn. You might as well use wheat. But we're going to have to wait and see how, they're reporting these things to us on Friday. And technically, the market keeps running into trouble. All three of the big grains. Soybeans got very close to that $15 level again yesterday. Sellers come in and market moves back down. So we're in some big choppy ranges, but these key levels on the upside need to get penetrated. $15 in the soybeans, about $7.50 in the corn, and $8 or so in the wheat. Once the markets get above those key resistance levels, then maybe we start to get some upside momentum from there. But in the meantime, we're going to trade these ranges. Support in the soybeans, I would expect to hold somewhere around 14.70 to 75. If those levels don't hold, then there might be a little bit more downside. In the corn, it comes in around 7.20, 7.25. And in the wheat, somewhere around 7.60, 7.55. So again, until we get some compelling data here, I would expect these markets to continue to chop around in these sideways ranges that I just mentioned to you. So we'll be back on Friday to look at this report a little more closely and see if it's given us what we need, to get some better direction out of the market. In the meantime, please feel free to give me a call. My number is 800-826-4124. And as always, remember that trading commodity futures does involve substantial risk of loss and is not suitable for everyone. Thank you.